For pretty much our entire lives, one currency has been king of global finance, the US dollar. But that long reign might be facing its biggest challenge yet. Today, we're diving into the world's complicated and potentially very messy breakup with the dollar.
So what's kicking all of this off? Well, it starts with something that seems a little strange. Central banks all over the world are buying up physical gold at a pace we haven't seen in more than half a century. So why the sudden rush for this ancient asset? That's the big question we're going to answer.
To really get why everyone is suddenly so interested in gold, we first have to look at the flip side of that coin. We need to talk about the US dollar and the growing anxieties that surround it.
You know, for about 80 years, the dollar has been the undisputed champion. After World War II, it was basically crowned the world's reserve currency, the foundation for all global trade. If you wanted to buy oil or pretty much any major commodity, you had to use dollars. It was a symbol of stability. But today, that long era of dominance is starting to show some serious cracks.
Now, this shift isn't just happening in a vacuum. Nations around the globe are looking at rising inflation, they're looking at the staggering size of the U.S. national debt, and they're feeling the whiplash from U.S. economic policies that can swamp their own economies. But there's one factor in particular that's really putting this change into overdrive. And that big factor is how the dollar is being used, not just as a currency, but as a powerful, and I mean powerful, tool of foreign policy.
So what exactly are we talking about when we say financial sanctions? Well, because the whole world's financial plumbing is built around the US dollar, it gives the United States this unique ability to just turn off the tap for another country, effectively cutting them off from international trade and finance.
And let's be clear, this isn't just some theoretical threat. For the countries that get targeted, the consequences are immediate and they are severe. Their assets held in dollars can be frozen in an instant. They can be almost completely isolated from the global economy. All of a sudden, the world's currency becomes a source of massive risk. So, if you're a nation watching this happen, what's your logical response? Well, you start searching for financial autonomy. You try to build an economic system that can't be held hostage by geopolitical fights you might not even be involved in. You start looking for an escape plan.
And for many countries, that escape plan, that insurance policy, is gold. And this brings us right back to this new global gold rush.
This chart really breaks down the why. The dollar is a fiat currency. Its value comes from a government promise. It can be printed, and it's subject to inflation. Gold, though, it's a physical asset you can actually hold. It's been used as a hedge against inflation for centuries. And here's the most important part. It's politically neutral. No single country controls it.
I mean, just look at this spike. It tells the whole story. For years, central banks bought gold at a pretty steady, predictable rate. But recently, boom, the number has absolutely exploded, more than tripling the average. This isn't just a small trend. This is a massive, coordinated pivot.
And leading this charge are the BRICS nations. That's Brazil, Russia, India, China, and South Africa, along with their partners. These countries are aggressively adding gold to their reserves. It's a key part of their whole strategy to become less dependent on the US dollar. But hoarding gold is only one part of the equation. To really, truly move away from the dollar, countries have to fundamentally change how they trade with each other. They're literally building new financial roads that bypass the dollar system completely. So here's how that works. Two countries, let's say India and the UAE, they make a deal to trade with each other using their own currencies, the rupee and the dirham. They just cut the dollar out of the equation entirely. This helps them avoid conversion costs, sure, but the bigger prize is that it insulates them from the ups and downs of U.S. economic policy. And we're seeing these kinds of agreements pop up all over the world. So you've got this rush to gold, you've got these new trade routes. All of these shifts lead to one massive question. What in the world does the future of money and global finance actually look like?
Right now, it looks like there are two broad paths this could take. The first is a slow, gradual shift. The dollar doesn't disappear, it just has to share the stage with other big currencies, like the euro or the yuan. We'd get a multipolar currency world. The other scenario? It's a lot more dramatic. It involves a sudden, rapid collapse in confidence in the dollar, which could set off major global financial instability.
Either way you slice it, the implications are huge. This isn't just about finance, it's really about power. A world that relies less on the dollar is a world with totally different power dynamics. We're talking new economic alliances and a financial system that is way more complex and maybe a lot less predictable than the one we've known for the past 80 years. So this isn't some abstract academic story.
The fundamental rules of money and power are literally being rewritten as we speak. And that leaves all of us with a really critical question. What does this monumental shift mean for your money and for your future